All right, today I took a trade this morning and I didn't go back in the market. And I'm going to break down exactly why I didn't go back and why it would have been amazing for you not to go back, even though there were three different times it looked like you were going to get a really great push to the downside and you would have got slapped out of your trade all three times. I'm going to break them down right now for you. So if you want to check out how much money I made this morning and how I made that, exactly the levels I took, I showed you exactly where I entered, why I exited when I exited, and showed you all that in my previous live. In this live, same market, but I'm coming after the market's almost, there's 2 minutes left in the market, so the market is almost closed. And I'm showing you essentially why I decided to get out this morning and why I never went back in. Because I sensed that certain things were going to play around, and they played around. Okay, that's just what they did. So this morning, these are the same levels, same key levels, same lines that I drew this morning. And so what actually happened is we did go back and put a body through this gap. Isn't that amazing? Awesome, right? I missed it either way because I took what I trade and then I decided to sit out. And I don't care because my account is green. So I decided I was going to get out and then it went back and filled a wick there. Awesome, great, whatever. But it also completely reversed. And on the left side, we have our 15-minute, which is our zoomed in, right? Shows you all the noise, shows you all the candles, 15 minutes at a time. And then we're looking at the 4 hour on the right side, which shows a little bit less noise. It just shows you about three candles for the pre-market and where we are now. And in about 1 minute, we're going to close and we're going to see what exactly happens after post-market, which is exciting. So the reason I didn't want to go back in on a macro basis, so a macro basis is big, macro is big. So on a 4 hour time frame basis, the reason I didn't want to go back in, and you can use the 4 hour or the 1 hour, 4 hour, 1 day, 1 week, anything above that is all macro, big. So these bigger time frames, I decided not to go back in specifically because of this gap that we filled in our pre-market. So that's that same thing here. This same candle, this black candle here. It's exactly why I didn't want to go back in because this candle completely invalidated this gap and was like, hey, even though like I can probably consolidate a little bit until market open, I'm just gonna go ahead and do it right now. I'm gonna go ahead and close out. I'm gonna go ahead and fully push through this pre-market gap because I feel like it. And it did. That's exactly what it did. Right? Awesome. But what happens on the opposite side of that is that we reject straight out of it back into the gap that I wanted to trade. Perfect, right? That was one of my confirmations from this morning. But one of the reasons I didn't get back in is one, because I had already gotten green on the day. That's my personal conviction. Once you take one good trade a day, all you need is one good trade a day. And when I say good, notice I say the word good. I don't say perfect, right? You just need one good trade. You need one that followed your rules. You need a trade that was aligning to your personal convictions of all the things that you know to be true, like you're trading as your edge, right? My edge is as a scalper. So I'm trading as a scalper. I'm doing, following my rules. I am following all the things that I know to be true. And I am being patient in the market, right? One good trade is all you need per day. So I don't need to get back in. Hey, I will leave money on the table any day of the week because all the small times I follow my rules make me more money than any one big trade, right? So that's why, that's one of the reasons. The other reason is that we decided to tap into this gap not once, well, actually, one, two. I mean, we rode the line of this gap all day. Let's just be honest. It's exhausting. Okay? If you were in here and you were watching to see if you're like maybe you entered here for puts and you're like, oh, it's gonna drop down some more, like that would have been exhausting to just watch that. And so imagine, because you're not trading with your edge, because you don't have a real reason to stay in or stay out of a trade because you haven't identified if you are a scalper or if you are a swinger or what you are. You haven't identified that yet. And so you're just trading whatever the day gives you. You're like, it's going down. Today I'm a scalper. Oh, it looks like it's not going to give me anything today. And it might take 2 weeks to form, right? There's no setup today, but it might give me a setup in 2 weeks. Now I'm a swinger, right? You're just being tossed in the winds of the candles. But when you are a person who comes with your edge, hey, I am a scalper. Whatever this market gives me needs to align with this edge that I have, or I'm staying out. That is a really great way to approach the market because then when things like this happen, you don't get stuck in them and you don't get exhausted by being thrown around by candles. So, literally, imagine you're in a trade and you either, you know, see your setup is something here, or you take this puts down, or something that rejects this zone and you are confirmed and you're great. Right? You take your money and you leave. And you're good. You come back later and you come back to just check on the market, see what happened. And you saw that if you would have stayed an extra 5 minutes because you wanted to push down some more, you would have still been holding it. That 5 minutes turns into another 4 hours of holding it throughout the day because you decided that you wanted to push down more, you want to get more money, or you want to see your percentage move a little bit more. So that's what happens with a lot of beginner traders, that you enter into something and then you're like, oh, this is great. And then it looks like it's going to keep pushing down. And so instead of following a specific edge, you're constantly being thrown around by the wind of how candles are, which is they're just candles. They're just there to show you price action. They're not personal. They don't have brains. They're not humans or anything. You can't take that stuff personally. It's just a candle. They're showing you the wicks and they're showing you the bodies of the candles, right? They're showing you their strength. On my channel, I have a full breakdown of how to read candlestick strength to see when to enter and exit certain trades, right? Those are things to use that tell you how to enter and exit, not things you ignore that keep you in trades that you shouldn't be in the first place and just being with the wind all day. So that's why I decided to stay out the market, because I'd already gotten my win for the day. And even though I could have changed my strategy and been a swinger for the rest of the day and I would have been in a little bit more profit, how much more likely is that to happen all the time? It's not. And so the approach that I personally take that I want to share with you is that I do the thing that is sustainable. I do the strategy and the edge that is repeatable and sustainable. So every single day, I can bet that if I come with my edge, it's either going to give me a trade, like it as in the market's either going to show me a trade or it's not. Period. But there was a certain way I was trading in the beginning that some of you guys may resonate with when you watch this video back. And make sure to like the video if you're already in here. It helps to push it out to other beginner traders or those who want to learn about the markets and read charts really well. So I really appreciate that. But one of the things is that if you don't know your edge and you don't know why you're entering and exiting, then how can you predict what's going to happen when you get into the market, right? One of the reasons that we trade is to make money. But you only make money if you know you can take some money out. You only make money if you know you can come to the market, log into TradingView, log into Webull, and you know you can get some money out. But you don't know you can do that unless you have like this edge that you bring to the market. If you don't bring any edge, then you let the market be your edge. And then you're just like you're literally at the mercy of the market. And that is not a really great place to be. You never want to be at the mercy of the market because the market doesn't have mercy. The market is just candlesticks, bodies, and wicks and price action and a timer that ticks down. It's really harsh to be put in that because then you end up in consolidations like this that look really well, but they trade in between two zones that never even fully got validated for the rest of the day. Like it validated until like 11 a.m. It's 4 p.m. now. You would have been in that for 6 hours. You would have been watching this for 6 hours at this point. You would be exhausted. And so again, I like to do the thing that is repeatable and that is sustainable. Even if sometimes I leave money on the table. Even if sometimes I get out of a trade and I make a little bit less than I thought I would. Because guess what? Sometimes I make a little bit more than I thought I would. Often I make more than I thought I would. So if you can bet on something that's consistent, you bet on this edge that you're going to bring to the market, and the reason that you can bet on it, and when I say bet, I mean rely. Like it's like that friend that you have that if you call, they're going to answer, right? And if they're not answering, it's because they're actually busy. That person that you can really rely on, right? You have a strategy that you can rely on because you know that if you bring it to the market and there's actually an opportunity, it's going to bring you home some money. And you know that if there's not an opportunity, then you actually aren't going to play today. And that's fine, because it's better to leave money on the table than to be at the constant mercy of the market, because the market doesn't have mercy. The other thing I want to break down for you is going a little bit higher up. Let's move up to the 1 week. Again, we completely filled this gap. This wick here shown starting there. We filled the gap. We didn't completely fill it. It's like you're never going to completely fill it. I think it was about 50 cents. Last time I checked, 28.8. Yeah, like 50, 60 cents left back in there. So it wasn't like we left a lot of price movement not touched. We did invalidate it, right? We did invalidate the gap. But what happens on this higher time frame is, what are we doing? We are pushing a lot. We're actually pushing to be in a bullish sentiment. And so today, if you were a scalper, would have been a great opportunity to go ahead and get into some long-term scalps for over the weekend. But again, there's no setup that I see based on my setup, right? And my setup and my edge is based off of the candlestick strength, candlestick patterns, and the chart patterns that I really love and that always work for me, right? When I see them, they work. That's why I use support and resistance, because it is the basis of every single trading strategy that exists. It is the basis of every single indicator. It is the basis of everything in the market. So I just use the basis. If I use the basis, and the basis is what makes everything else work, then I might as well use the basis. And it works. So there's nothing that's telling me, because right, we're at all-time highs, so all we have is this price action here, and nothing here is telling me that we're set up to take call. The calls are kind of subjective. Like, we look like we're going to push up because we had a rejection down here at 580.76, and then we haven't been that down in a very long time. We've decided, like, for the past 2 weeks that we just want to keep rising to the upside, and we're about to hit an ATH. So we can assume, just through our wisdom and our knowledge being in the market, that, hey, we might hit that ATH, but we actually don't know if that's going to truly happen until we see some more price action happen, and we can say, hey, because it might actually come back down, create a double bottom, and then reach 700 in the next month. We don't know. We have to wait for those things to form. And so if you haven't watched my video, it's titled Why Being a Full-Time Day Trader is Dangerous. It's because it's not a full-time job. Like, you're watching the markets for 1 to 2 hours a day. You're making money in 5, 10, 20 minutes. Like, most traders, when you trade, you're not actually watching the markets for more than like a few hours a day, barely, from your room. Barely that, right? And so it's dangerous to want to make something happen every single day. What the best part is when you don't have to make something happen every day. You don't have to make money every day, because you realize that it doesn't, like, full time in trading just means that you may or may not take a trade, but it doesn't mean you have to. There is no certainties in trading as far as, like, the frequency of trades, right? You can't detect a frequency of trades. You can just detect your frequency of consistency when you do take a trade, and that's where your edge is. That's where your edge really makes a difference. So, on that's how I looked at it on a macro and then on a micro scale. And again, I took my profit this morning and I did not get back into the market for all the reasons that I talked to you guys about already. The one thing I want to say for this trade is that you only need one good trade. You only need one good trade a day. And again, notice I said the word good. You only need one good trade. You only need one trade where you followed the rules, where you closed the laptop after you took your profit, when you did what you said you were going to do. Like, that is what builds a consistent trader. It's not about like being the best winner and getting through all the hardships about trading. It's more so like, how many times can you show up and do what you said you were going to do? How many times can you like actually show up and use the edge that you said works for you? I'm not a swinger. Now, I will take a swing if I see something that's like red lights flashing at me. But as I just told you, we don't have that. So, no, ma'am, no, sir. Not doing it. Otherwise, you're going to prove yourself into blowing an account. So, if you continue to think that you need to trade better than good, then you're going to keep proving yourself until you blow an account, because you're going to be really aggressive, really risky, instead of using your risk management, which means never trading more than you're willing to lose. How about if you don't want to lose $20, you only buy contracts that are $20? Again, you can trade with $1, $2, $3, $4, $5. You can turn $1 to $1.50 and do that for a year and become a millionaire. Am I gonna do that? Am I gonna show you how to do that? No, but you can, because it's real, because it's math. It's all math, all right? But if you want to not lose more than $20 a day, well, then why are you buying contracts that are $200? Right? That's not risk management. Your risk management is one simple question: how much am I willing to lose on this trade? And I will never risk more than I'm willing to lose. That's it. That's risk management right there. Stamp it. Write it down. Kai Wynn said that risk management is, how much am I willing to lose on this trade? Or how much am I willing to lose today? Maybe I'm willing to lose $50 today, and I'm going to take 5 different chances, and each of them will be $10 risk to like have an average over the day. But really, you only need one good trade, so just trade that one good trade and then scale up if it works, get out if it doesn't. Now you still have your account size to go back in and roll the ball again and be able to have your ability to trade again. That's just really how the markets really work. So the other thing I wanted to say is that the market pays daily. Like I said, like, you can't really detect the consistency of how many setups there'll be, but you can definitely detect that if you do take a setup, how successful it will be based on if you can follow your edge or not, because your edge should include patience. I think everybody's edge should start with patience. And everybody's edge should start with patience. And you get paid in this game, in this industry, you get paid in direct proportion to your patience. Period. You get paid in direct proportion to your patience, which means the more patient you are, the more money you make. How do you become patient? I have a whole video on that. It's called Why Patience is Not Enough, or I may have changed the title, but it says something about patience in the title. It's a Wednesday reality check video, so it should be in that playlist. I'm actually just going to look for you right now. It is called Why Patience Will Keep You Losing, because it's true. Because people approach patience the totally wrong way. You ask a trader, "Oh, what is patience?" You say, "I should have patience. What does that mean?" And then draw a blank. You have to think about these things so that we can actually apply them. So definitely watch that video if you are struggling with patience. It's what I use and have used thus far to become such a calm trader. Now, The other thing is that personally, I'd rather miss a move than force it. All of these are points underneath the umbrella of one good trade a day is enough. One good trade a day is enough because one good trade literally just means following your rules, following your edge, doing what you said you'll do, keeping who you are, right? If you're a scalper, you scalp. If you're a swinger, you swing. If you see something that's really great and like the market's dropping $50, because it's done that before, like drop $30 in a minute, like you become a scalper for that day. Go ahead. I wouldn't hold you to it. Do what you want. But what happens is that you're now cultivating an identity as a swinger if you swing a lot. And then if you take a scalp every now and again when it's like flashing at you, then boom, cool. But if you're a scalper, then you scalp all the time. You're refining that skill often. But if you do both and you're like trying to do 50-50, then you're never going to refine either or. I'm more afraid of the person that has practiced a karate kick, one karate kick 10,000 times, than I am scared of the person that knows 10,000 kicks they've only practiced once. I'm more scared of the person that has done one thing 10,000 times because they have refined it, they know it, and I'm definitely wherever I am in proximity to their foot, I'm done for. But if it's a person that's practiced 10,000 different kicks once they practiced it one time, oh, like I'm not scared of you because you haven't even mastered one of the 10,000. I know you haven't because you're focused on juggling all type of stuff, right? Different movements, different positions, all type of different stuff. So I'm scared of the person that's done the same thing over and over and over. And that's where my edges come from, trading QQQ every single day, watching it like the back of my hand, knowing how to read it like the back of my hand. I don't chase other charts or other trades, and I don't care about anything besides support resistance, my 100 EMA. I have a video on my of how I read my 100 EMA on my channel. I use my all average true range, which I just video is coming Sunday on that actually, I believe. That's already been posted and scheduled. And then I use my volume buy and sell bars. Right? So yeah, I just believe that patience is gonna print more money than anything ever will in this game. It's like your profit is in direct proportion. I don't mean just in proportion, like, oh, you can be patient, you can make money. No, I mean like it's literally in direct proportion. The more you are patient, the more money you make. Because guess what? When you're patient, you take less losses, which means you walk away with more money. And that's the secret truth that has really made me more than anything is learning how to keep my losses low. And then, because I've been trading for so long, I also have the skill of account recovery, which I'm currently using. So today I was able to bring my account back now a whole fourth back. So now I only have 3/4 left to go. It's been 2 days, so that's amazing. And I'm so excited to continue making these videos because it's just showing in real time what I'm doing, but showing you in real time why I didn't go back in this market because it just wasn't worth it. It wasn't worth my time or my patience or my my time or my patience or my edge. Like it wasn't worth like risking my edge for that because then if I risk my edge, now what? Now I'm like taking time away from sharpening my edge by just doing the same thing over and over and over. Now I'm like, let me get in and try to, and now I'm like dampening the skill that I already have. Doesn't make sense to do that. So I just stayed out, kept my profit for the day. And like I said, I, most of the days it's very consistent. Some days I make a tiny bit less than I'm supposed to because of slippage or something like that. In this case today it was slippage. And there's some days where I make way more than I'm supposed to. I'm following the same rules and it actually works out in my favor. So yes, today, like I said, we're back at 25% back, which is amazing. 25% back into my loss. I'm taking the losses like 100%, right? And I'm like, how much, like, just gaining it back little by little by compounding. So right now 25% back, which is perfect. I love it. And so on Monday, I'm gonna have to show up and continue, right? It might turn from 25% to 26, but then it might jump from 26% to 50. I don't know how movement's gonna go next week. We'll see. I will do a maybe. Well, last week I did a pre-market, pre-week markup. So I come on a Sunday or on the weekend and I show what happened all this week and what I'm looking forward to all next week as far as like everything I'm planning on trading, all the levels I'm looking at, all the things I'm interested in. So I already have one of those videos from last week, and that's what these lines are from. It's from Sunday last week, and they did me very well this week, which is great. Um, yeah, so what else do I have for you? Yeah, that's everything for today. That that's exactly why I didn't go back in the market, and everything I did today to make sure that I saved my account. If you want to watch more videos like this, my live section of my YouTube channel has a lot of videos, a lot of lives that you can binge over the weekend and see how I trade, and drop some comments down below of what's been helping you. And I will definitely see you in my next video. I'm very excited for the month of December. December is my favorite month to trade because it's the end of the year. We have a lot of tax hacking and tax harvesting that a lot of traders are doing, so that benefits us with volatility. Um, Also, Christmas, then it builds up to New Year's, and then also other holidays. We had the Black Friday, which I traded, which is on my channel. Like, there's so many fun things that are kind of building in this season. So